Hello, my name is Wim Lievens, and in this little video I will present you my new tool, the WL SuperFive on NinjaTrader. As always, I will do a little introduction about my trading philosophy. I'll talk a little bit about chart analysis and of course the tool, the strategies that are in the tool, the implementations, and of course I will show you the tool on NinjaTrader 8. As always, we begin with a disclaimer. Please know that products like CFD, forex, futures or others are sometimes traded on margin. You have to know that this means that you can actually trade with more money than you have on your account. So be careful. There are ways to learn this. If you have any questions regarding this, feel free to contact me via my website, my trade class. And especially on NinjaTrader, you can test on demo accounts. Please do this and learn to know these risks. Risks are there to be managed, and this is something that you should and can learn. Now, my trade class is a training provider. We are not a broker, and we do not generate revenue from traders' transactions via online brokers. So when it comes to this part of the business, we are neutral. And now let's begin and talk about this new tool, WL SuperFive, which actually is the practical implementation of my online course. Now, I've been trading now since 1998, and I must say for the last 10 or 11 years I've only traded price movement. So this tool is based on price movement. 5 strategies are incorporated. You can use this tool on all time frames, instruments, range bars, Heikin-Ashi bars, my own bars that I developed, WL bars, so that makes no difference. You can work purely in a manual way. You can work with alarms. You can even do auto trading with this tool. The reason I developed this tool is to give people more structure, to make things a little bit more easy when they look at charts, to look at things that are important, and especially to avoid overtrading, and to know or to see or to be able to decide when to pull the trigger and when not. Does that mean this tool is perfect? Of course not, but it dramatically improves the quality of the trades. That means that once people work with this tool for several months, they start to understand which movements work for them. They know their numbers, they know their statistics, and it has so far, because it has been out there now for about 18 months, has very positive impact on the results of the students I've had in Europe. So this is the presentation in English on NinjaTrader. So I hope it will do the same for you. Now, few topics on and trading philosophy. For many years I've talked about price versus price movement combined with volume versus indicators. I'm a very strong believer that most of the information you need to trade is actually already incorporated in the price and in the volume, which is, combined with that price level. I think it's very important to understand how markets and why markets move, and what market structure is and what these market cycles are. To understand that what we trade is movement and not time. To understand how you can combine price movement, different dimension, or sometimes with different time frames. I see many mistakes there. So there are certain things, certain time frames, certain dimensions you can combine with each other, but others you better not. There's a very important component on money management and on a trading plan and on a business model, because I always get the same question, and I answer that question, is how much does your system make? So what are your numbers? What's the statistic? And according to which strategies one applies and the money management system which is applied, we have the numbers. I have the numbers, and I will share them with all my students. Okay, so I like to get from a pretty practical man. You've already heard that I am not from England or the States. I live in Brussels. But for me, and this is with everything you will see, when something is presented to me, I will just look at this and say, okay, what can I actually do with this? How will it help me? How can I use this on a day-to-day basis? And everything I do, everything I've always done, and especially in trading, I have used things that worked for me. And you see a large part of that incorporated in the tool. So my trading philosophy in a nutshell is to focus only on the essential. So I like to trade what I see and keep it simple, and therefore I will of course use certain things, but I like to make the distinction between the stuff that I think is really important and I would say the, well, not so important things. And let's say there's very little point of having 56 things to use when you're sitting in front of your chart and you have to trade the markets. It doesn't work that way. So you have to make a choice and say, all right, I will look at this, this, and this. That's how I can simplify the way I look at this. This is a structured approach. I always do the same. And when I have done this for many months, I know exactly how much this system will make. The end of the day, that's what I do. Now, as I've said before, price movement is key, combined with volume. I am convinced that in order to make money or to be successful in the markets, only 20% is analysis and the strategies you use, 30% is money management, and 50% is actually putting this all together. Now, of course, this discipline and control of emotion and ego is very important, but unless your system, your money management is not 100% clear to you and you don't know exactly how much that's going to bring, well, that part, this 50%, is going to be very difficult. So I think you need everything. You need, markets are very competitive, so you need to be successful in these three parts. Something that I've done for years, it was a little bit new when I started 7-8 years ago, is that what I've always done is to show people what I do in real time. And you will probably see this in the near future, also in English. I've done this in several other languages in Europe, but I always believe that practice makes perfect, and also to convince people by showing it in real time, not only talking about something, is in the end of the day what will make the difference, and what also will convince people to maybe follow your ideas and to try this to do themselves. Now I just give you a few slides. This is an agenda of a course. This was a very successful day trading course for the last 5 years in Europe, and is now since very recently also available in English. There are quite some videos. I think in total it's 10 to 12 hours with some coaching involved, some live trading. So if you have any questions, you can always contact me through my website. Now, a few words on market analysis or price analysis or chart analysis. You call it as you want, but this is something that most people know. In it's unbelievable that we still we retail traders sometimes, to be polite, are one step too late, and or sometimes 2 steps. And this is I think very often due to complicating stuff, to using very complex analysis. This image that you see here, which you can see this as a joke, but it's actually something that was sent to me many years ago. So now we can laugh with this, but you have to understand that this is serious, because if we start using too many indicators, I think we get confused. It is very often because we're insecure, we see confirmation. They very often have a dogmatic nature. Some of these indicators are trend indicators, others are oscillators. Some of these indicators even redraw. So it also, they lack context, so very often lead to overtrading. So I am not a huge fan. I will admit that, if you're used to using certain indicators and they give you certain structure and they clarify the chart image and they facilitate the price analysis, just please do this. But the first 80%, even more, of the price analysis or the chart analysis should come from price combined with volume. And after that, you can still add, 1 or 2 of the indicators you like. But the basis is price movement, okay? So that's very important to understand how these markets work. Now, what I try to bring across is to look at these movements in a structured way. So there is a checklist. And of course, try ASAP to recognize whether you're in a trend market or a sideways market, and to know what market phase or what cycle you're in, and to know what the key price levels are, know what the value area is, locate control or rejection prices. I'm not saying this will always be very clear, but there is through your head a certain checklist where you have to go through to look at markets and to actually answer one question. There is, should I be trading now? Yes or no? In other words, do I have an edge? Is there an opportunity for me now more than normal? When I enter now in this or in this direction, or I wait for a signal, are market conditions favorable? That is the first question. Very often people mix these two decisions of deciding whether to trade or not with an entry. For me, these are two completely different things. If the answer to this question is yes, by all means, there is an opportunity now to trade, for example, on the long side, then I will take one of the strategies out of my pocket, wait for the signal and trade. But if the answer to this question is no, I wait. I wait, or I look for something else. That is, I think, one of the most important things I can give. This is just an example of an analysis, just one of the slides of a course, but just want to give you some ideas. Now, what I've done in the SuperFive tool, I have incorporated as much as possible of this analysis in order, again, to make it as structured and as simple as possible to decide whether we should be in the markets or just stay on the sidelines. Market cycles, this is something that most people know or should know, is the market can go have an uptrend, a downtrend, sideways, you can have accumulation, distribution, but this should be a reflex. Once you see a chart, any chart in any time frame, is immediately see, oh, this is the phase where I'm now, where the market is now. So then with that, most people, when you're in sideways markets, well, it's not easy. There should be enough room to trade there. So, but most people will be more successful in trend phases. And this is what you see here. I have to say, this is what we look for. We look for higher highs or lower highs and lower lows. This is something that most of us know, and most people can make good money in these markets. So far, so good. This is good news when we have this. And of course, we like these trends. We like the beginning trends. When you have sideways market and you have a first move and you have a potentially beginning trend, this is movements that we love to trade, and very often with very good results. So far, so good. The problem, of course, is this. Unfortunately, this sideways markets are there. Well, some people will say over 60%, some people will say 70%. I don't know the exact number. What I do know is that more than the 35% or the 40% from the trend markets, you have this. And in these market conditions, most traders will lose. Why will they lose? Because they keep applying their trend or movement strategies in market conditions which are not favorable. So again, the first question has to be answered correctly before you should be trading. If one just trades signals, what people then call strategies, without this context, very often it will sooner or later not work that well. So the problem then is, yeah, that's all wonderful to see this image, but very often I've done 3 or 4 trades in this market before I recognize that I'm in a sideways market. So if I see this after, I don't know, 2 or 3 up and down moves, well, it doesn't really, help me, because I've already lost 3 or 4 times. So the trick is, and this is incorporated in the tool, is to see this as soon as possible, and to see this actually after the, I would say, second move. And we normally do this with the exponential moving average 20 trick. I teach people. This is a very simple trick. Now I've upgraded this, of course, into the tool substantially better. But the idea is this. When you're in a trend market, the market will, move on one side of this line. Yeah, it can go a little bit, let's say it's to the upside, it can go a little bit under, but will stay most of the time above this line. Now, the thing is, when I see that the market is moving on both sides of this line, even when it happens once, same distance, I will assume that the market is sideways and will stop trading until I see the potential beginning of a new trend. Now what I've done, this idea, which is very simple, we'll see I've upgraded this idea and I actually implemented it as it's called the WL trend in the SuperFive system. I will show this later. But anyway, what I'm trying to get at is when you do the analysis right, that I hope that you will actually buy where professionals buy, and then you will sell where professionals sell, and not vice versa, not always be one step too late. Now, let's get to the good stuff, the strategies. Now, I know there are tens of thousands of strategies available on the internet, and at the end of the day, people don't know where to begin because they say, all right, well, this is all wonderful, and what should I do? Where do I begin? And I would always say, let's now break this down and let's start with the beginning. And the beginning is that, what are the basic price movements? Well, you have trend movements, you have ranges, you have support and resistance tests, and you have breakouts. These are, I would say, the big four categories of what prices can do. Now, you will see I have, put this into 5 strategies, but at the end of the day, what I'm trying to say is that any of the strategies any movements that you trade, you should be able to put them in one of these movement categories. So the end of the day is not, this is a very complex strategy X, Y, Z. No, you are trading probably, very likely, one of these movements. Okay. Now what we will try to do in the WL SuperFive system is we try people to focus on this, and what very often works well is when people specialize in one or two movements. Now, trying to trade every movement or to recognize every opportunity is something that in my mind is not very realistic. So, but when you focus, I would say success is more likely. Now, what I've said also is that in day trading, and I've been doing this now for about 10-11 years, is I will trade for day trading with movement candles. Let's call it this. You can call it range bars. I even start very long time ago. I start with the Renko bars, and then I even sometime did range bars combined with Heikinashi bars. Enfin, I've done many different things, but I've always, for day trading, preferred to trade with movement candles, which are built by movement and not by time. Now, the SuperFive system will work on any candle that is available in NinjaTrader, and will of course work on any time frame. As a general rule, I could say that most people who use this tool over a 15-minute time frame will use normal candles. 15 minutes, 60 minutes, 4 hours daily, combining many instruments together. So that's one way. Once we go in the area of day trading, let's say, or even scalping, where we trade smaller movement, I would say there is a real advantage of using these movement candles. Now, I have developed my own movement candle, the WL bars, very popular already here in Europe, and I've done a separate video on that one. It's about 30 minutes. You will find it on my YouTube channel. If you can't find it, maybe you can go on my website. It might be there. Otherwise, just drop me a small email and I'll get it to you. But so what these WL bars are, just in a nutshell, it's a combination of range bars, Renko bars, and Heikin Ashi bars. They combine, in my opinion, the advantages of every single bar without having the inconveniences, because they are programmed one on the other. But so just some images here, but just to let you know that for the SuperFive, which is what we're discussing now, you can use it on any type of candle. Now, what is important, of course, is these triads, something that most people know, or when you have it on time frames, we call it market structure high and market structure low, or reversal points. Now, this is something that we have also created on the SuperFive tool, and you will see some of the signals, some of the algorithms, some of the alerts are built on candles. Now, again, the platform will recognize this on range, Renko, WL bars, or time candles. This is actually the configuration which will very often trigger a position, but a lot of other conditions have to be met, but I will explain this to you on the platform. Now, on trade management, I'm not going to get into that. Just add it to the slides, to two slides, just as a reminder. Now, the reason I'm showing this is for point number 3, and this is, I think, where the SuperFive tool is a tremendous help, is that it will really avoid overtrading. It will really tell you, hey, now don't trade. Very often it's very, very strange, actually, that I would say people sometimes ask me, what is now the most important feature, or what is the most important strategy of the tool? And I will actually have to say the strategy where you don't trade is the capacity to see when not to trade. I would say that is probably the most important feature of this tool. Now, I'm just not going to talk about this, and so we're going to trade these price movements. Yeah, we recognize an edge. I'll show you how. We look at the market in a structured way with reversals, with movements. We look at accumulation, distribution. You will see in my course, I use volume profile, I use previous day high-low, I use also pivots I like, but there is a certain list. It's not, huge, but I say, okay, that's what I look at, that's what important, that's when I trade, that's when I don't trade. Now, this is probably one of the most important slides of this presentation. I know it has nothing to do and not directly with the SuperFive tool, but it's basically why the SuperFive tool, why I developed it. I've been doing now these courses as a hobby for the last 7-8 years, and these are the issues. One of these issues very often comes back with the students I work with, and that is, as I said before, trading when there is no trend, or against the trend, or entering the market very close to support and resistance levels, which I don't think is very smart. It's better to wait until these levels are broken. Then, of course, number 3, we talked about it, the fear of missing out syndrome, the over trading problem that many traders have. Entering the trade too late, very often due to the use, or I would say the wrong use using indicators the wrong way and therefore being a step too late. Gambling, I have to say, I don't see a lot with my students, and very, very, very happy to see this. But the other four are definitely something. Every time you trade, you should have these in mind. Say, hey, am I not breaking one of these rules? Now, 5 strategies. The first strategy is a trend correction, and in this strategy there are 4 possibilities. That means that in the SuperFive tool there are 9 algorithms, of course 9 algorithms to the upside and 9 to the downside, with different parameters. I will show this to you later. But so you have trend corrections, and look at the image. Number 1, the breakouts. That's number 2, break to the upside, to the downside, support and resistance tests, momentum or impulse move, and then the trend reversals. These are the 5 strategies which I actually programmed, incorporated, created the algorithm to trade. Now, again, I hope you can immediately see that there is a certain structure, a certain logic to all this, because in my mind, these are the most important movements that you can have. Now, of course, there is there are good setups and not so good setups, and of course you have to be able to recognize those. But the tool will, to a very large extent, do this for you. But still, I want to explain this to you and show you again what the things are we should look at, why certain entries are probably very good and other entries maybe you shouldn't do. I will talk you through it, the different strategies, and then of course we will show this to you on the NinjaTrader platform. Now let's talk about the anatomy of the chart, or how does this SuperFive trading tool, what you're looking at, what you see, these colors, these clouds I see, what are they and how will they help me? How can I use this to my advantage? And you will see that, and you clearly see this again here on the slide, that you see this green red cloud and you see this blue magenta cloud. Of course you can change all these colors and lines as you wish, as you can with everything else on NinjaTrader. But so that is something you can, that is what we're looking at. And let's begin with these green and red clouds. What is important? Again, my first question is, should I be trading now? Yes and no. Now, what these green and red clouds are, they are actually, they show the area of the exponential moving average 20, but they don't only do this in the dimension in which you are trading, but also in one dimension higher. Let's try and explain this in better English. Let's say you are trading on a 1 minute chart and you look at the exponential moving average 20 in order to see where the market is going and whether it's going anywhere at all. Well, many people always also want to see the 5 minute chart. What this does, it actually programs 2 charts, one on the other, or 2 time frames, or 2 dimensions, one on the other, and you can actually see the EMA 20 areas on both. Meaning that when you like to trade several instruments at the same time, well, you have more room, because where you needed 2 charts before, now you only need 1. And again, it simplifies the whole concept. Now, it goes without saying, when it's green, market goes to the upside. When it's red, it's to the downside. But also you can see whether, and I will teach you this, is whether the trend is getting stronger or whether it's strong enough, and whether it's young, not young. Should we trade at all? Also, when you see these clouds, which are sometimes thin, market is not good, and stay away. It's very visual, very easy to see. Okay, this is one thing. The second is what you see is this small cloud, this blue and magenta cloud, which actually shows the momentum or the volatility. And it is the combination of these two clouds, combining trend, strength, and momentum, or volatility, if you like, that will trigger certain alerts or show you where there are potentially good setups or not. That's how it's built. So basically, there is nothing more on these charts. I will give you during, because everybody who buys this tool also gets some coaching sessions from me. I will show you a few other little tricks, depends on what you're trading. Some people trade forex, some people trade fast. Anyway, there are many things you can do with this, but I'll give you a few other tricks how you can even filter some of the settings and directions even more. Okay, and then up to you to decide which you want to use and which you don't want to use. But you also have the algorithms, of course, and I will talk a little bit about the practical side. This we already discussed. Let's say let's trade less but better. Okay, now the anatomy here, again, you see it, we've discussed this, real trend, real momentum, and what you of course have also is the SuperFive tool. So basically, when I send you the files, when you buy this and I send you the files, you will get the real trend, you will get the real momentum, and you get the SuperFive, which basically are the 5 strategies, the 5 algorithms, or I should say 9 algorithms, because in the correction segment there are 4 different. Now, show it like this. I can show this a little bit better in the next slide. And so if you open the strategies in NinjaTrader, this is what you see. Of course, you have the alerts. You can choose any alert you like. You can have the pop-up box, you can have the sounds, you can have email if you trade on longer time frames. That is all possible. You can actually have the text shown to you. Some people like to have the signal on the chart where it says WL buy or WL sell. You can have that. Then, of course, we get to the real stuff, is you want to see both signals or not. I will say that most people, and I will explain more about this during the coaching sessions, is that we very often only activate one side of the market. So we have a very clear idea based on what the tool is saying to us, and we have certain filters in there. And so we will, in some markets, just activate long signals, or as you see here, only activate short signals. There are market conditions in which we will activate both, but I'll be very honest, 80-90% of the time it's one direction or the other. Then you see signals wanted. That is actually, as I discussed, I like to trade trends which are young, or momentum moves, which I will explain, which are young. So because the older a movement gets, well, the more likely it is to turn sooner or later. And therefore, me personally, I like to trade young movements. But you can actually decide this yourself. Put in the number there of 10. You can see this on my screen. But normally I put 2 or 3. Some people will put 99 because they want to be alerted of every correction, for example, of every momentum. Me personally, I will just go for the young trends, because in terms of potential they can give me a lot more. And then what you see is here the corrections, the reversals, the momentums, support and resistance and breakouts, where of course you have to, you know, give the upper and lower level of support or of breakout, and this is basically very straightforward. But you will see the algorithms are actually very well, they're very well made in the sense that they are quite selective. Now, trend corrections, we all know the principle. Market is in a trend, moves in a certain direction, corrects. I always look for a correction of, let's say, 30% minimum compared to the last move, and then when the market turns and goes in the initial direction, that's of course when we try to enter. This is basically what we do. Now, the real trick here is to see or to understand what are good corrections and what are not so good corrections. And therefore I actually have fine-tune this as much as I can, and I will explain you the different options, the different possibilities you have in the WL corrections. Let me draw this for you. Let's look at this, this image on the left. Here, this is the, I would say, EMA 20 area of the, I would say, dimension in which we are trading. And this is the EMA 20 area of one dimension higher. Now, as I explained, when it's green, we only trade to the upside. When it's red, only to the downside, but also according to certain signals. Now, we have 4 options. The first option is when we have a triad, as here, for example, there, which under certain conditions happens on the short side or the fast line, if you wish, and that will trigger, you can read it, I hope you can read this, WL buy. That's one option. You could actually have the same, but here on the slow line or the higher dimension. This is the second option. What you could also do is ask for both. You could say, now I want to have the signals on this line and on this line. That's the third option. And then you have the fourth option, which you can see on the right side here of the screen, is you can see here that the smaller cloud and the WL momentum, which changes in color all the time, actually changes color here at this spot. You see the little triangle there, the alert and the WL cell, is when this color change happens, or where the WL momentum changes direction again in the same direction as the WL trend. That's when we get an alert, and we only get this when this color change happens within the WL trend. When it will happen outside here in the correction, these corrections will not count. Why? Because in corrections, the more corrections we get, very often the better it is. So that's how it is set up. So you have 4 options: fast and slow, or WL momentum. These are You have to choose one. If you want to trade two from these, well, what you have to do then is open a second chart. That is possible, of course, but normally here you have plenty of choice. Now we'll clean this up. So, and let's continue. Now, reversals. Reversals are great because, well, trends can't last forever, and sooner or later the party is over. Most of you will know this concept, what a trend termination or trend reversal. Now the system will recognize this, and the system will recognize this with the WL trend. And again, I will draw a little bit, and you can see it here. You see here, this is always, well, very often, a first indication is when you see, let's say the market is going to the downside here, and then you see higher lows. Now this example is only 2, but sometimes it's 4 or 5, can be more, but the market goes back. And then there's a moment where the market breaks through the slow line of the WL trend. And then you get an alert here, WL buy. Now you have several options. You can enter the market right away, or as I do, I wait for the first triad, which actually here there are several triads, but it's confirmed here. I will enter there. Okay, so you can enter immediately, or you wait for another triad. That's what you can do. This is how we trade the reversals. Stop is according to the money management you want to use. I personally always use triads, last triads, reversals, confirmed reversals to set my first stop. Okay, so another very good trick, and here you see the same thing. There's a high, a lower high, it breaks through here, boom, and you get the short sign. Very important is, to me also, is to see how thick, how wide the WL trend is. If, for example, you had a very wide green WL trend, and then you have some small reversal correction where you have a small WL trend, not so wide. But when that small WL trend changes to green again, those to me are the best exits. These WL trends, or the thickness of the WL trend, will tell you very clearly, it's very visual, what I would say the underlying movement of the market is. And if these clouds are small and change color all the time, even with the other filters I will give you, don't even bother to trade. This is where many people have difficulties, and this is what I'm trying to explain, and the issue that I'm trying to tackle. This is the momentum, the WL momentum, the impulse moves, which I must say is a strategy which I have developed some years ago, I would say out of pure frustration. Why? Because I can't even remember the times that I sat in front of my screen. I saw markets, break out, explode to one side or the other, and then saying, "Oh, look at this!" But then immediately also realizing I am not in this trade, and I don't know, or I am afraid to get back into this trade because it's gone too far. I don't know where this is going to go. The money management I have to apply on this doesn't work because my stop would be too far, and when I'm going to get in there, I'm going to be, the market's going to turn, and so on and so on. So this is difficult. It's a challenge, but on the other side, huge opportunity, because here the movement is there. Remember, I've talked about, is the market in a trend? Is it moving? Is there volatility? And so on. Yes, but here in this strategy, the movement is right in front of you. It just happened. It just, how do I find a trick? How do I find a strategy to still get in there? Okay, and that is actually what I've developed. Now, I have to say that for this strategy, movement candles, so range bars, WL bars, work substantially better. Why? Because all bars have the same size, and even in a strong move you will have many little bars when the market moves. But the nice thing you have here is you will have very often hesitations. Let me explain this to you. This is, let's say the market moves very, very fast here, has been going up from here. This is a hesitation because here you see there's a triad here. See this? So it just for a second sometimes, I say, I hesitate a little bit before it goes further. Now these triads, which I shown here with range bars, that's what we want. If you would do this on a minute, 5 minute, 15 minute chart, the probability that you will just see a huge candle with no way to enter is well, there's a substantial chance that you won't be able to get in. With this type of candles, you can, and of course the WL SuperFive will also alert you of these moves. These triads are built on the WL momentum, that means on the smaller cloud in one direction or another. Several conditions have to be met. Position of these how steep, and there's quite a few parameters in this algorithm, but the idea is there, and you can see the same thing here to the downside. Yeah, you see this, and here another triad. Yeah, in a very strong move to the downside. Okay, so these are momentum or impulse trades. The third strategies, the third strategy in the list. Then you have, of course, the support and resistance tests, which is something, or a strategy or a principle that most people know. Problem that I have very often with this is that when we trade this, or when this is traded, well, people assume a certain level being a support or a resistance and saying, look, when the market hits there, the market will turn. And so when it hits there, I will enter the market, I will set my stop and maybe my target, and that's it. So actually it's a, I would say, a calculated bet. Well, I don't bet. I want to have a little edge, and therefore in this algorithm I need a confirmation. I need not only the market to be at a support level, but I need to see a few small things that this support is actually holding. And you can see it on the image here. It's given me 3 buy signals in that support level. That support level is 2 levels, upper and lower level, which I will set. And if this level is confirmed and I get certain signals, then I'll say, all right, now that's a little confirmation. Does it mean it's perfect? Of course it isn't. Nothing is in the markets, but at least I have an edge here. Okay, I just don't like a level to be set and say, okay, well, it's going to turn there. For me, that is not enough. Okay, so this is number 4. Let's move to number 5, and this is one that I like to trade because it's a very good strategy, and it's also a very difficult one to trade, unfortunately. Why? Because if you would trade breakouts blindly, you would probably, and you would, mentally be very strong and take every breakout. I think you would probably make money. But on the other hand, you also need to say that you would probably also lose 70 or 75% of your trades. And that, to many people, is an issue, is a problem, is difficult. It's something that it just, for many people, it doesn't work. And therefore, I would say, well, why not trade breakouts in a way that your chances of success are a little bit higher? And that's what I've done over the years. It has worked well for me, and I've programmed it in the tool. Let's say you have, I'll just draw this and make this as simple as I possibly can. Let's say that you have here, you want to trade this breakout here. You see this level here, and say, all right, this market's going to break out. And you see the nice accumulation here, and say, okay, well, it could break out. Now, there are different ways to trade this, but people will very often trade what they think. And very often they will think right. But the problem is, we do not know when this break, when it's going to happen. Sometimes it breaks from, first try and hup, the breakout works. Sometimes, well, it takes 7 times, 2 hours. Well, the trader tried 3 times, has given up the 4 times, maybe already closed his platform, just to see the next day or a few hours later that the market has gone or broken out exactly where he or she thought the market would go. In order to avoid this, again, to some extent, is to wait for confirmation. So I will give you the 4 ways in which these breakouts are very often traded. I will try to convince you to do it in a certain way. Now, first thing would be to enter here in the challenge and say, hey, I know it's going to break out. I'm going to put my order in here. I'm going to anticipate the breakout. Now, the problem is where your stop is going to be, because very often what you will see in these breakouts that you sometimes have a move down before it moves up. So that doesn't really work. So that's maybe not such a good idea. Another thing would be, is what we see the most, is where people say, well, look at this, it's going to break out. And we actually advertise our position to the whole world by setting a buy stop order just above these levels. I wouldn't do this. Why? Again, 70-75% of these moves will not work. They will eventually very often work, but the problem is, how many times are you going to try? So I wouldn't do this either. Another option is when it breaks, that the markets come back very often to test. Remember the old story, resistance becomes support. Turn there, okay? And it's called in English, a beautiful word for this thing. They call it the last kiss. I've read this some time ago. It's a wonderful thing to say. And again, it's not bad. I've nothing against it, but still, it might sometimes fall back. So, number 4, and in my opinion, the best option is when you have a new high here, is to wait for this level to break, 1 tick above, for example, and to enter there. Again, is this perfect? Of course not, but it's better, substantially better. Okay, so this is the way also the algorithm is programmed to recognize these signals, which in my opinion have a little bit more value, a little bit more certainty than the other 3. So you have to understand the movements that we've explained here are pretty, you could say they're basic, but there is more to it than you think, because you have to be able to to make the difference between the good setups and not so good setups, and especially to recognize favorable market conditions. Okay, so we've talked about that. Very important. Those are the moves. Now, hold on, this is not exactly right, so now I can move on. So I've also put this in my slides so you can see 1, 2, 3, 4 break in the top. This is how we want to do it, and here some example given also in the slides. Now I have just added a few of my favorites, and this is something that most people will discover after a few weeks, a few months, when they play with the tool, because you will see that you will be able to combine several elements or several strategies, and that will make it very interesting. I can say, people always ask this, and I will share this with you, but again, this is not, you shouldn't think that these are the best strategies. Me personally, I would say the momentum correction in the reversals are probably 80-85% of my positions. Okay, the breakouts I do under certain market conditions, and also the momentum when it happens, when I get in the beginning of a move. So, but again, I have people only trading the support and resistance areas. I have people only trading reversals, and so on. So here, just a few examples. This is something that many people will start recognizing once they trade, have traded a while with this tool. Now, I just want to give you some ideas about how to implement this practically, what you can actually do with this on a daily basis. Of course, you can trade with this on movement candles, range bars, WL bars, seconds, minutes, hours, days. That is all possible. But what you can also do, of course, is some people are day traders. They only trade the Nasdaq or the S&P, or others might just trade Tesla or Apple. That's all great, and they might just focus on small movements, or on quick, fast movement, high volatility, very fast, and that is something that many people will do with this tool. But other people will, especially in the forex market, or even combining instruments which are not correlated, you could easily combine 4, 8, 12 instruments. I've even people combining over 20 instruments on 4-hour or daily charts just to wait for alerts. So you have to look at this, how you want to use this, and then people say, oh, Wim, is it better to use it on seconds or minutes than it is on days? No, it's the same. But basically, the algorithms work the same. It just has to do with the personality, the character, the trading style of every person. So you can trade one instrument to 20 different time frames, different ranges, whatever you like. So there's a huge amount of things you can do with this. Now I will show the tool on the trading platform, of course, just explaining you how this works. People who buy this tool from my website, I will send them, of course, the file, which you then can, via the control center in NinjaTrader, you can import via tools. It's a Ninja script, and that is very simple to do. It's immediately imported into your system. What I will need from you is the machine ID, which you will find under help here, about, and I hope this is not too small, but there is a machine ID. That is actually the machine on which you use NinjaTrader. Now, I will need that from you in order to activate this tool on the platform. Now, just very simple, show this to you, yeah, so you can see what this actually looks like. Yeah, these are WL bars. This is a WL bar of actually 2 ticks, so it's very fast. The market will open in a few minutes. I can of course here put this on 2 minutes. Look, that's what it looks like. It's very simple, 2 minutes. Or I can set this on again range bars if I want it, range bar 5. Yeah, you can change all the colors you like. You know how to do this in NinjaTrader. It's always the same principle. You can change whatever you like. WL bars I normally use in the afternoon. WL bars, sorry, afternoon in Brussels, which means the morning the market open in America for people around the world. So my WL bars will look like this. I click here on indicators. You can see it here. And again, I hope it's not too small, but what you will see here is that you'll have the SuperFive, the WL momentum and the WL trend. The WL momentum and the WL trend is very straightforward. You can change all the colors, you can change the ribbons, you can color the bars. Enfin, you can do from the visual point of view, do what you like with it, and that is all what it does. It's just a visual, it's just the visual aspect. Where of course, and I've shown this before, you can see the different strategies and settings of the tool you will find in the SuperFive, where you have the alerts, and whether you want the text to be shown, your long, short signals, the amount of signals wanted, and of course all the strategies. That's pretty much it. It's very straightforward to use. During the coaching session I will give you a few pointers, or if afterwards you have any questions, don't hesitate to contact me. Okay, so you can play around with this as much as you like, and then come back with your questions. With this, what I always give is the PDF of what I presented. Of course, you will get as well. You will get the video. Just want to tell you that there is, well, a YouTube channel with a substantial amount of videos. There are a few videos in English already. There will be more in the future, and so you can see what I do. You can see that it's pretty straightforward. I'm just a trader like most of you, and I trade the markets. I still enjoy it a lot. I trade about 12, maybe 15 hours a week, no more, and I will always trade with other people, so everybody can see. It's very open, very straightforward, can see how I do it and what I do. Tips and tricks. First, learn to read a chart as professionals do. Try to understand how markets work, and you need some roadmap, some, I would say, checklist maybe for this, but I hope the tool can help you with this, to see at least, okay, I should be trading or not in this or the other direction. I wouldn't use all strategies at the same time. 1, 2, 3 maximum. So again, always the same. Let's try to get 1 or 2 strategies right. Most people have a certain, knack, certain affinity with one or the other, and so we'll go for that one. On the money management side, or on the mental side, just one advice: trade below your emotional level, which is the question I always ask people: is how much money can you lose 3 times in a row? And that if that is a certain amount, well, that is okay. But if that is too much, you should probably lower that amount. In order to help you, you could scale out your position. It is not the best money management technique, but it is one mentally that will work for many people. So there are different levels in money management, and I don't think it's a bad idea to start with at a certain level, something that you can actually handle, and then go to levels which will, yes, bring you or give you more profit, but are mentally more difficult to achieve. Don't play or gamble, very important. Now, again, it's always the same thing. We only trade when we see an advantage, when we see an edge. I will use this tool for that because it's pretty straightforward. It helps a lot. It will also give you a certain statistic. It's something what I do. I will answer the question when people use this with a certain money management, what you can expect. It's not beating around the bush and saying, oh, well, I don't know, it depends on what. No, there are statistics, and you actually can say to people what there is to be expected of a trading system. I would always start with a demo account. I would also always, especially on a new tool, advise at least a demo for 6 to 8 weeks with certain proven results before moving before putting real money on the table. The markets will still be there in a few months. Take your time to build up this mental capital, get a feeling for this tool and to have some confidence before you start trading the markets with this tool with real money. In the end of the day, what we try to do is to only trade what we see. And I would like to thank you again for all the emails, attention I get, something that was a little bit unexpected, I must say, because I'm just a trader like you are. Thanks again for your vote of confidence, and good luck. Bye-bye.